August 2014, the Mahama government was compelled by the outcome of its homegrown policies and economic management to turn to the IMF for a bailout. The market, indeed the business community, had lost confidence in the capacity of the government to steer the economy with the requisite competence, care, and discipline back on track. Mr. Speaker, permit me to quote what the Financial Times wrote on August 3, 2014, in a report of the headline, Ghana Seeks IMF Help After Currency Falls 40%. It reads, Ghana, the country that epitomized the Africa Rising narrative of strong economic growth and improved governance, is to seek help from the International Monetary Fund. The West African nation will turn to the fund for financial assistance after its currency plunged roughly 40% this year against the dollar. Accra's request for a bailout is likely to shake some investors, as Ghana was seen as a model of economic and political development in the continent. In 2007, under the Kufuor administration, it became the first country in sub-Saharan Africa, apart from South Africa, to tap the sovereign bond market, raising $750 million through a 10-year bond. The FT report of 2014, Mr. Speaker, reminds us further of how dire the situation was. Ghana has this year repeatedly postponed a return to the bond market, but Mr. Tebe said the country still planned a $1 billion 10-year bond. He was quoted as saying that the capital market will find our bond attractive once Ghana entered the IMF program. Even then, we needed the World Bank to provide a $400 million guarantee to support Ghana's $1 billion sovereign bond. Despite this guarantee, the 15-year Eurobond issued in 2015, unfortunately, attracted the highest coupon rate ever in Ghana's history at 10.75%. The world, Mr. Speaker, found our plunge shocking, perplexing. This was because by 2011, Ghana had begun producing oil in commercial quantities. Hopes of a better Ghana were high. Sadly, Mr. Speaker, by the end of the following year, 2012, the economy was already in a tailspin spiral by the excessive spending, particularly in the last 4 months to the 2012 general elections. This led Ghana recording a deficit of 11.5% of GDP, highest deficit on record in the Fourth Republic. The administration of President Mahama, Mr. Speaker, never recovered from that 2012 deficit. By February 2014, Mr. Speaker, the IMF was calling for urgent measures to restore macroeconomic stability. By the end of that year, Ghana's economy was characterized by rising interest rates to around 26% on short-term domestic debt, 91-day treasury bills, high policy interest rate of up to 21%, high year-on-year inflation of 17%, a CD versus dollar depreciation of over 31%, low net international reserves of 1.8 months import cover, mounting arrears, large capital outflows, and doomsday continue to have devastating impact on the social and economic lives of Ghanaians. Simply put, Mr. Speaker, the economy under the Mahama administration was in severe crisis. It is important to give this background, Mr. Speaker, in order. It is important to give this background, Mr. Speaker, in order for the country to understand where we were, how we got there, the pills the people have had to swallow in our committed efforts to get us out and on the go.